Investors never rest, baby, even on a Saturday, catching up on information. So shout out to you guys. You guys are of the select few. And like it says over there, in order to become the 1%, you must do what the other 99% will not do. Keep that in mind. Let's get that in the shot right there, right? It's all good. It's all good. But we have some breaking news to go over here in this video, which could be seen as not so much a good thing. And we do have a positive thing to go over. So we got a lot to cover. We're going to get into what exactly is going to happen next week, kind of what I expect to happen, as well as all of the data you need to know around AMC stock. So if you guys find value out of this video, or you want to help do your part to grow the community and make us even closer to seeing the MOAS, hit the like button. Subscribe to the channel, source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with us live in real time every single day, 9:30 to 4 p.m., every day the markets are open, check that link out down below in the pinned comment. Nonetheless, let's get to it. So the breaking news that potentially could be bad for the markets is the fact that Boris Johnson, he's the Prime Minister of UK, has went and actually visited Ukraine in person and met with Zelensky. And then right after that, you did have this announcement that the UK will send 120 armored vehicles plus new anti-ship missiles to support Ukraine's armed forces. Announcement made after talks in Kyiv between Boris Johnson and Zelensky. Now, I'm sure there will be some kind of response from Russia about this. And think back to 2 weeks ago. The markets only cared about Russia and Ukraine. They didn't even care about the Fed. Didn't care at all. Now the markets, as far as last week, that's all they cared about was the Fed. So if you start to get the markets, one, still caring about the Fed, but two, the market's starting to care about Russia and Ukraine, what Russia says a little bit more, because this is escalatory, right? Then that could be a sinister combo, and I just want to put that in your guys' minds and keep you up to date with that, because this situation is not over. You have possibly uncertainties about starting World War III. The more that gets escalated, which this is certainly an escalation, the more the markets will kind of start to worry about that. And at the same time, you have the Fed that is tightening down liquidity. It could be a sinister combination nonetheless. So that's really what the breaking news is. That's what you guys really need to know. I know not everybody keeps up with this stuff, and I only like to bring you guys things that will potentially move the markets, and that's exactly what this is. On another note, the U.S. is going to expand and recalibrate the intelligence information it is sharing with Ukraine as the scope of the Russian invasion is shifting. That is the Pentagon press spokesperson, right? So you're getting a little bit more escalatory verbiage, and if Russia does, do something or say something, it's going to move the markets, and it would likely freak the markets out. But by and large, next week, the markets are going to be paying attention to that CPI data report that does come out on Tuesday. Now, if we do get bad statements from Russia, that's going to give the markets an overall negative vibe, right? It will come back. The markets already have a negative vibe because of the Fed. Now, if inflation, for whatever reason, I don't think it's very likely, but if inflation does show that it's not going up as much or starting to reflect to the downside, the markets will rally off of that. I think that is the lesser chance here. I think it's more likely the markets will actually be pretty damn fearful, because inflation will likely come in higher than 0.5%. That's month over month. That would be 6% inflation year over year. So even if this comes in at 0.6%, you're looking at 6.6% inflation year over year. So that number is going to be very important. The core CPI month over month for March, and that comes out at 8:30 in the morning on Tuesday, and that is what is really going to dominate the markets. Now, let me be honest with you guys. If Monday is red, like deep red, then the CPI report will have a little bit more cushion on it because it will be kind of priced into the markets a little bit more. If you have a flat day on Monday or even a green day on Monday, there will be less cushion to soften a potential bad CPI report. So you got to pay attention to Monday here. That's going to give you a glimpse or a little bit better context to what will likely happen in the markets coming on Tuesday. So that's basically that. That's the big data point for this week. You also do have bank earnings that start throughout the week, and that's going to be very important, and investors are paying attention to that to get a feel of how the consumers are spending, if they're still going out getting loans, if their saving rates, all of that that goes along with banks is going to be very important for the markets, and it really sets the trajectory heading into the rest of earnings season. If the banks are bad, then earnings at companies also tend to be bad. And I don't think they're going to be all too great, to be honest with you guys. I think you're going to see a lot of pressure on margins because of inflation. And I do think you're going to see a lot of companies like Apple, your large companies, that post worse than expected earnings, and that could really help to drive down the markets. And that is ultimately a bullish thing for AMC. It could bring AMC down in the short term. Over the next couple of weeks, we could see that bounce back up to the mid-20s range, come back down a little bit, back down to 18, whatever the scenario is with that. But if the markets come down, that's where you get closer to the MOAS, because hedge funds have less capital to put up to service their margin calls when the next big catalyst for AMC stock does come out, which will happen. Now, on another more bullish note for the markets, especially for a lot of stocks that we are personally invested in, a lot of high growth stocks, you're seeing the bond yields going through the roof, which is not necessarily directly good for high growth stocks because, hey, hedge funds, money managers, mutual funds, all these guys that are players in the markets with a lot of money, they can now get better yields on treasuries, but they're selling treasuries. They're not buying treasuries, even at a 2.7% return. So that is implying that growth is going to slow down, and investors need a higher yield to put their money into. That can suggest inflation is going to remain higher for longer as well. Which, do you know what is good for growth stocks? Growth actually slowing down in the real economy, because if the economy is not growing or growing very slowly, investors look towards stocks that are growing a lot, like 20, 30, 40, 50, 60, 100% in a year. Those stocks become a lot more attractive, and those will become more so highly valued than where they have been at over the past couple of weeks and months. Now, the only issue here is we need to see inflation really tick down to see those growth stocks start to take off. And I think that's going to happen by the end of this year, if not the second half of 2023. So my thoughts there, a little bit of good and bad news to bring to you guys here on this sunny Saturday afternoon. It has been rainy as hell actually in Michigan, so can't really say it's too sunny here, but nonetheless, let's talk about the other data that you guys need to know, specifically around AMC stock. And I think it's funny to point out that hedge funds are actually taking major beatings right now. Look at Melvin Capital, ends first quarter down 20.6%. They cannot get a damn break. This hedge fund, I will be very shocked if they are still in business within the next year. And there's also a lot of other news around specific hedge funds, like Adelphia Capital to become a family office after a run of poor performance. And just type in hedge fund news and read some of these stories, and a lot of it has to do with bad short positions that actually came out. So pretty interesting right there. You guys definitely want to stay up to date with that one. Give you a glimpse into kind of how hedge funds are performing, because they don't really have to come out and disclose that all of the time. So nonetheless, that's that. Let's talk about AMC in the Ortex data. Let's go ahead and give this page a quick refresher. And Friday, you did see 23 orders totaling $12.41 million, positive order value of 53%. Over the past week, 280 orders totaling $139.01 million, positive order value of 69%. So, a lot of bullish activity on AMC stock. Even on days like Friday, we dropped 7.5%. You've still seen, out of the total dollar amount of options placed on AMC stock, 53% of those dollars were on the bullish side, making bullish bets on AMC. And I think at this point, you're kind of foolish to bet on AMC continuing to go down. Like, the lowest we would possibly go, in my personal opinion, unless the markets did completely freak out and go through a flash crash, would be about $15 per share. You've already seen most of that loss. So my personal opinion, not really a good time to be shorting AMC or especially buying puts on it. But we will talk about that in tomorrow's video specifically. The utilization of 100% for AMC, 20.58% short interest of free float, 106.07 million shares that are sold short, cost to borrow max of about 2.73%, cost to borrow minimum of 1.25%. Let me just say right now, these numbers are not correct. They're not going to let you lend out AMC for, less than 3%. It's simply not going to happen. But what does this data tell us? That hedge funds shorts have not been covering on their short positions. Very clear to see at the current moment. Now, as far as the Fed rate monitor tool, we're pricing in the next 1, 2, 3, 4, 5, 6 meetings at 50 basis point rate hike. So that's going to do a lot to really restrict capital, and that's really important. That's the main component of the MOAS. You need to see capital restricted, and if you have not seen the last video, the logic is like this. Think about 08. There was tons of short squeezes with virtually hardly any retail activity. Who do you know that was actually trading stocks as a retail investor in 08, like actively getting in, getting out, trading stocks, FOMOing into stocks? It didn't happen all too often back, during that time, but you still seen short squeezes at the bottom of the markets. Well, because liquidity was restricted. Any little catalyst can send stocks flying when liquidity is restricted. But I highly do suggest you guys go take a look back at the video that was posted earlier at about noon, because you'll find a lot of context to why I think right now is a really good time to be actually buying the dip. Now, a quick look at the technicals. We did hold the 50-day moving average. I think we were actually 3 pennies under that, but it's so minuscule, you can't even draw any firm conclusions out of that. We'll see on Monday what happens. If we go under it in a substantial way and don't come back up early trading Tuesday, then we might fall back to that $15 range. Now, if we do see a green day on Monday, especially for a lot of higher growth stocks like AMC, and we can push back up to about that $20, $21 range, that's definitely going to be a good sign. But all in all, the stock went up, it came down. Like I've said many times, it's consistently been going straight down, and there is a business behind AMC at the very least, regardless of a short squeeze. AMC is a business. They are a business. They're not like any other hype stock or most other hype stocks that people like to invest in. So with that in mind, you're just likely to see a bounce here soon in general. It doesn't really take a rocket scientist to see this. You're gonna see a damn bounce, and I think it's gonna be very, very explosive. Now, as far as the MACD, that has went bearish. The gap here is diverging, but it took a while to actually go bearish. Right here was the first day you were actually bearish, and that was on Thursday, April 7th. And then on Friday, the gap did widen quite a bit more, as we were down about 7.55%. The RSI is at 44.29, so under that neutral level at 50. So you definitely have some room to make another leg up to the upside. But that's pretty much all. Volume still has remained relatively low, almost consistently going down. Friday's volume was 42.6 million shares, so it doesn't take a lot of shorted shares to really push us down 7% on a day when the volume is very low. So that's basically all for this video. We'll get into more about a potential, gamma squeeze, things like that, coming on tomorrow's video when we go over the price prediction, because we need more context over the weekend. We need to get more analyst expectations for CPI, what people are saying, all of that. And that's my job. That's what I like to do. Take all of these opinions to try to come to a reasonable conclusion of what will likely happen in the next week with AMC stock as well as the broad markets. That's what we like to go over on Sunday. So if you guys want to be a part of that, make sure to subscribe to the channel, hit the like button, source your comments, questions, or concerns down below in the comment section, and make sure to come join us on the live stream tomorrow, Sunday night, 10 p.m. to 11 p.m. Eastern Standard Time. We go over the futures, any questions, comments, or concerns that you guys do have, any trades that are looking really good, catalyst, news, all of that, we talk about it Sunday through Thursday night. So that's going to be all. If you guys want to come trade with us in real time, every time I send out alerts, news, events, catalysts, whatever it is, it changes every single day, then check that out, link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.